Dan, how are you positioning yourself ahead of the Fed meeting? You actually think that it could set us up for a brief rally?
Yeah, to be clear, I have no idea how the market's going to react to the Fed meeting. What we did was we took advantage of the 1.2 put-to-call ratio on Friday. If you remember, FedEx pre-announced one of the ugliest pre-announcements I can remember. Missed EPS by 33%, guided EPS lower by almost 50% for the following quarter, and Dow Transport's below the June low. So we used some of that in the lower open yesterday to cover some of our shorts. We were net short. Looking at the Fed meeting, my bias would be if the market actually goes lower, because I think Jerome Powell is going to channel more of his, mojo from Jackson Hole, where he was pretty direct, gave you no reason to be optimistic. And I think the data they're going to give you gives you no reason to be optimistic. But, people want to believe that the Fed's going to pivot. If you look at the futures markets, they actually have the Fed cutting again in June quarter of next year. And I just think there's zero chance of that happening. So we'll see how the market takes this. Some of this is going to depend on what happens between now and when the decision actually comes out.
Right. And Dan, you've been very good this year at calling bear market rallies. So to be clear, your thesis is still intact that we could hit new lows here. You point to FedEx, which took markets by surprise or a little bit off guard last week. But since then, there's been some maybe not positive, but less dire commentary from CEOs like Intuit, Home Depot, even Marriott. How do you square those?
Well, I think you actually touched upon it in your earlier segment, where there's this shift going on from goods to services. So if you supply goods, those really spiked during the pandemic because you couldn't go out to restaurants, you weren't doing ride sharing, you weren't in Las Vegas like John is right now. You're stuck at home on your Peloton bike. So I think now what you're seeing is people going out to hotels like Marriott. They're doing ride sharing to their favorite vacation spots. So the things that we have set up in our portfolio, again, remember, we think the market's going to be down 30 to 50% from peak to trough. Our single point estimate on the S&P is 3,000. So with that in mind, we're more focused on our shorts because we think that's where we're going to make the profits. We're up for the year, we're up for the month, but that's being driven by our short book, not our long book, which in general is down, obviously. So that's kind of how we're pairing this right now, and that's kind of how we see this going forward, where we're trying to avoid PCs, smartphones on the good side, but on the service side, we've got things like actually Uber in there, and we've got online sports betting in there, again, services related, defensives like Walmart, and some healthcare in there, and commodities. And we're short things like internet advertising, goods, and enterprise software.